Private equity firms have ramped up their exposure to startups and are participating in more than half of all U.S. venture capital deals by value, approaching 400 deals over $100 million just in the first half of 2021. Startup founders are cashing out in their Series A fundraises. What? I want to talk about a common theme that we've talked about for, a year or so now, as it relates to asset price inflation with tech valuations, just basically going through the roof. More signs of that happening, where there's actually a good article that came out here in PitchBook talking about what's driving private equity's march on VC. We've talked about this the past few months, looking at basically just this concept of the VC firms getting crammed down into earlier and earlier stage deals. And you have these larger funds that have to put money to work, and they are coming into the mid to late stage, kind of growth stage tech startup deals. And this article does a great job really highlighting that private equity firms have ramped up their exposure to startups and are participating in more than half of all U.S. venture capital deals by value, up from about 37% just 2 years ago. So keep in mind that's by value. So if I go, if I scroll down in this piece here and you look at, they have a chart here on U.S. VC mega deals. So VC fundraises over $100 million within 2021. This is so far in 2021, gang. As of just the first 2 quarters in 2021, you have over 300 $100+ million fundings. Compared to 2020, there was less than 300, maybe right around 300 for all of 2020. So we're over actually 320, approaching 400 deals over $100 million just in the first half of 2021. Okay. Which is just dwarfing entire years prior. Over $80 billion deployed in these mega deals in the first half of 2021, as compared to looks like maybe around $75 billion for all of 2020. And the numbers in 2019 and 2018 are even lower than 2020. So that stat, PE participating in at least half of all the VC funding, that's aggregate VC dollars. But that's why this is happening, right? You have this first chart showing private equity is this green line. They are up at 50% share of all US VC deals by value. And then you have asset managers, which would be like hedge funds and alternative types of funds, are at 46.7%. And these are through the first half of 2021 numbers, right? But wow, these are up from 46% in 2020 for PE, 38% for hedge funds and asset managers in 2020. So you can just see, right? They're coming in, they've got a lot more money than your average VC fund. They're coming in, they're cramming down, they're taking the mid to late stage deals, which is then causing the VC to have to look earlier and earlier, right? And that's how you see this cascading effect for just insane tech startup valuations. And I actually don't think it's going anywhere, because I don't think the money printing is going anywhere in this country or around the world. And I don't think interest rates are going up. So yeah, I actually think this trend continues, even though it doesn't make any sense. A lot of things don't make sense these days. Another byproduct of this, another topic related to this, is this article from The Information. Startup founders are cashing out in their Series A fundraises. What? You know what that means? It's like you started a company a year ago, maybe 2 years ago, no more than 3 years ago if you're doing your Series A. Okay. You're less than 3 years into this company. It's a startup. The thing doesn't even have a proven business model. The thing has some initial traction, kind of has like an MVP. And you're taking money out of the company as a founder? What investors would agree to that? right? And the answer is more and more of them, because they're all getting crammed down and they got to deploy this money, right? Because they're actually, they're charging management fees. They need to get their carry. You got to deploy the money. You have in these funds, right? You have a set amount of time to deploy the money. That's kind of the rub. They need to deploy. You don't want to chase these deals, but man, you don't see this kind of stuff. You've got record high Series A valuations. Yep. Founders retaining control, even as they turn some of their holdings into cash. And some investors are playing ball, agreeing to buy founders' shares in order to win competitive deals. It used to be that founders would ask for secondary sales. Now venture capitalists are coming out of the gate with it. Half of Series A and B deals now have some secondary component for founders. It's crazy. It's unheard of. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.